investing in stock markets there? Is it very tough to invest in the stock market? What if you make a loss? So these are the things which we are going to discuss today. And for that, you need to know this, the basics of stock market. I promise you, it will be very interesting. So stay with me till the very end. And what are we going to discuss today is something of prime importance and something which will build the step for what we are going to discuss ahead. So firstly, we'll just discuss a brief history of what exactly works in the stock market, how it works, and what are shares, shareholders, what are stock exchanges, NSE, BSE, the primary, secondary markets, and etc. So these are the many things which we are going to learn, so which will form the basis of what we are going to do ahead in the next video. So do stay and watch in order to build your concept. Now, before I move ahead, do not forget to subscribe and click the bell icon so that you're notified of what is going to come ahead for you guys. Let's move forward of what we have today in our list. Okay, so firstly, I would like to give a brief history of stock market. This is mainly because it will form the basis of why exactly was the formation of stock market even invented in the earlier primary years. So just to give an idea, I will be mostly focusing on the Indian stock markets. And Indian stock markets is one of the oldest stock markets in the Asian countries, and it was close to the 18th century when it was formed, or it was now why it was formed is because there was this group of people which gathered under the banyan tree, if you have heard of it, and they would claim some things or claim some profits from the company in order for the money they have given to the company. Now this became kind of it became a very fancy name what we are going to call as a stock, but this was the main primary focus. And why did the company actually take the money from the people was because that the company needed money, and at those times funds were important, and even 1 rupee had a big amount and a very huge amount. So under the banyan tree in the opposite the town hall, as we would say, so there was this informal group of stock brokers which were forming. So because there were lots of crowds, people would actually the stockbrokers which were there under the banyan tree, they would actually bid on stocks. They were like, hey, ek rupee, ek anna. So there was this action which was properly being taken, and which the people would claim their bids from the stockbrokers who would be standing under the banyan tree in order to get a respective share in the company. Now let's move. Now just keeping this in mind, what exactly is the share? Now share is basically your ownership or part ownership in the company. So now people have invested, so they get something in return. You have bought the chocolate, so you get the chocolate in return. And over here something intangible, that is the shares. Right. So people in the olden days used to get this shares certificate. Now nowadays it's all electronic, and how exactly it's done, demat and all, everything will be discussed. What's the process? So which will be done in the further videos, but over here for now we'll form what exactly everything goes and well and on. Right. So now as I've told, because of it actually started in the British times when the East India Company had formed, and this process had started because of the travel of the Portugal ships, etc. And that's how they would get money from the public and claim their bids, and this became a very ongoing process. And now and the New York Stock Exchange is the biggest stock exchange in the world, and with about like a 1.5 trillion trades per day. I'm not sure about during the quarantine, but that's what usually the amount used to happen. So basically now I would be telling about the shares. Now shares are basically, as I mentioned, a single unit. Now how do people purchase the shares, like where do we have to go and stuff? So it's basically the stock exchange. So stock exchange is basically a place where the companies list themselves and the public go through the brokers to the stock market, to the stock exchange in order to buy the shares. They cannot directly approach the company, please give me the share. No, they have to go to the stock market, and that is where their placing etc. takes place through the broker. Now the broker actually plays an important role over here. Why? Because everywhere broker, you can only buy shares through a broker. Why? Because brokers have this certificate, they are licensed, and their names etc. registered, and they're authenticated, and only through those people can actually deal and communicate with the stock exchange for further processes of buying and selling of shares. Okay, we'll get into detail later of how exactly the buying and selling takes place. But for now, do I understand what the stock exchange is? And as I mentioned, it's the NSE and BSE. So just to add on, NSE has the index called Nifty 50. Now, you might have heard in news that the Nifty has gone up, or it's come down 1,000 points, or the Sensex gone up, and so on. So what exactly does these mean? Now, Nifty 50 is basically the prime top 50 companies in India. They kind of represent the full overall how the stock market actually works. So it gives an overall picture for the outsiders or the investors of how the markets in India are performing, and that becomes the basis of further looking into details of each company. So if the markets itself are not performing, then why do you even look into the individual companies, right? So in order, that's why it's often said that performance of these index are very important in order to attract the investors. And there's a big news which comes across every time if there's a big fall in the Sensex or Nifty. And difference between Sensex and Nifty is nothing but that the Sensex is an index for the Bombay Stock Exchange and Nifty is for the National Stock Exchange. Sensex mostly has 30 prime companies, whereas Nifty 50 is taken as a prime index where 50 companies are listed, right? And these both are located in Mumbai. So I hope you got this clear I have a good picture of what exactly these indexes, what is the importance of these indices exactly in the stock market, and why exactly people look into these at an often pace when they are investing into individual companies, right? So let's move ahead. Now, as I mentioned, that there's the shares which are taken by individual people, right? Now, what benefit do the companies get, and what benefit do the shareholders, basically the people who own the shares of the company, get? Now, shareholders invest in companies because they can they are kind of getting the ownership in the company, so they can claim dividends. And dividends is basically a form of you say an income which people get when the company releases it, because if the company has made huge profits, they can give it to the equity shareholders in form of dividends, right? So the benefit the investors actually get is because of the huge return which stock markets actually give, much higher than any loans in a government or in any bank, etc. And obviously there are pros and cons in everything, so you have to be very smart when you invest into any company. So it depends on you how you're actually trading, but the returns overall are very high if you make a good amount of profit and the company you've invested in is really good. And the benefit the company is getting is because they do not have to they are getting money. They don't lose an opportunity cost. They can invest their capital into some other area because their investment is getting through the public. They are bringing in investment through the public. However, they do obviously lose control because a part of it has to be given to the shareholders. But this obviously they have to suppress on each of the things, and but they do gather money and they can invest into different avenues and expand their business, and that's exactly what the shareholders also want. Yeah, so you got a really basic idea of what exactly is the interest or basically the advantage of both the shareholders and the company. So now I'll be talking about basically the rights of what the shareholders actually possess when they get shares in the company and what exactly they can claim, right? So first is they have the rights to inspect the company's books and accounts, because that forms the basis on which company they would like to invest and which company they would not like to invest, or they might find it risky to invest. Now they can definitely receive dividends, as I mentioned, whenever the company announces one. It is not compulsory on the company's part, however, to announce a dividend. It's on their choice if they want to really retain and put the money into the growth of the business, or they want to give it to the shareholders. However, giving dividends to the shareholders actually gives in good news to the market, and the shareholders are really happy. So it forms an incentive for the other investors looking out in the market to invest in that particular company. But you might have noticed whenever dividend is announced, the stock prices of the company have falls down. We'll get to the you want to know the reasons, so please do check out my next video, which will be explaining these concepts, right? So moving on to the shareholders, right? They can attend the meetings, the annual general meetings. However, the preference shares and other types of shareholders cannot. Only the equity shareholders can. If you want to know more about what are the preference shares, what are debentures, etc., it's all there in further upcoming videos, so do not forget to check it out. And this is a very interesting area which you really need to explore, the youth need to explore, and I would really recommend you to actually learn about this concept and start investing. So as I mentioned, they have the right to check the books. They can transfer their shares as well. We'll learn more about transferring and removal of their removal of shares from the company, etc. The bonus, etc. in the further videos, because this video is mainly focusing on the basics of what these primary, secondary, and these terms actually mean. So as I mentioned, what are primary and secondary markets? Now why is this important to know is because these form the markets in which the trading actually happens, right? So primary market is basically when the company issues the shares directly to the shareholder. As I mentioned before, the shareholders do not have any relation to the company because everything is done through the stock exchange. However, in a primary market, they do have a one-time relation with the company, as only during the first initial public offering, which will be given by the company to the investors out in the public, because the company is new, the investors are new to the company, so they need to make themselves appear to the public, and that's why they directly contact with the public in order to release their shares and so that the public can invest in it, right? And it's a first step towards actually for a company to get listed and start their adventure in start individuals adventure and the company's adventure in raising funds and for us to list in stock markets. So after it's done to the investor, now the basic motive behind the stock market is basically to buy and sell shares in order to make money. Right. So, as I mentioned, it's done through the initial public offering. Now we move on to the secondary market. The secondary market is basically after the shares are declared to the public and the initial IPO basically is over, then the company has, the shareholders do not really interact with the company as such, and buying and selling it does not really take between the shareholders and the company as such, because the investors buy and sell with each other through brokers. So the company has no relation actually with the shareholders apart from releasing reports and being transparent on what exactly is going on in the company, but they don't, the buying and selling especially does not take place with the company. It's basically with the investor to investor. So I hope this is clear, and it forms a fundamental principle in other things which will be discussed ahead. I hope you really enjoyed this video, and I had a very fun time shooting it and learning from you guys, and it's a great opportunity for you guys to really enter into this area, into this world, into this wonderful world. So do continue watching and stay with me. Do follow me on Instagram and Facebook for such upcoming videos and news reports which I will be releasing from now on. So next video will mostly be focusing on terms like these as mentioned on your screen, and the things which I mentioned earlier. So I hope you see you there. Bye for now. Thank you.